All right, let's go over crude oil first, Gerald. Then I'm going to go over the gold setup I'm going to look for this morning. Let's look at crude. Crude oil. All right. No, we just need to look at crude. That's it. So what we want to do is the whole methodology is this. The first thing you're going to do when you first log in, the best way to trade the system, I have a trend filter built in on this black chart over here. We don't use moving averages for support and resistance, although the 50-day moving average, after my 20 cross to the 50, you do get a nice support or resistance on that on the first retracement after a crossover. So it gives you an area, but moving averages to me are worthless in general. You can't trade off of them. They're lagging indicators. They show no relationship between order flow. That being said, I like using them for trend direction. The first thing I look at, I don't care about market delta. I don't care about my Fibonacci retracement. I don't care about market profile when I log in. When I sit down at the trading desk, the first thing I ask myself one thing. What is the trend? Are we trending? The market can only do two things. It goes vertical or it goes sideways. If it goes vertical, I want to know if it's trending down or up. Look at the angle of the magenta moving average. That's your most important one, this pink moving average. If it's angled down, this is pre-built already into your system. It's pre-built into the system already. If it's angled down, I want you to look for shorts only with the system. Negative market deltas, red Fibonacci dots, and then also break retest a profile. So if I'm trending down, my methodology states this. I never buy low value area green. I let it break retest, and I always sell red in a downtrend, meaning high values in red, low values in green. We do not buy low value in a downtrend. This is in a downtrend. So that's the first order of business. If you're angled down, you want to sell retracements. You do not want to buy any positions long. Sell retracements. A lot of traders get taken to the woodshed in the market. Typically, the traders I see that have failed, and I've seen hundreds of traders over the course of the years, the traders that I see fail are scalpers or they're counter trend traders. It's one of the two. Typically, that wraps about 90% of the traders up in that fail in the futures market, stock market, being a stock trader, forex trader, what have you. Those are the two characteristics where they fail. They don't let their runners run after taking their first initial position out, and they scalp for 8, 3, 4, 5 ticks, in, out, in, out. Those traders never last. I've never seen any trader last like that. And then the traders that typically counter trend trade, trying to catch the highs and lows all the time. Only high frequency traders that have these algorithms already pre-built, those traders can get in and get out in milliseconds, but not an average retail trader. There's too much slippage involved, too much slippage as a retail trader, so you have to play the odds of letting the position run. And I'll show you how to do that. So that being said, what we want to do then is we want to look at the angle of the MA. If it's angled down, we want to sell retracements. Now, we had a trade set up on the black chart. It's very simple. We don't buy green. I'll go over these in a second. But everything red on my black and white chart, everything red lines are high value area. Everything blue is considered the control point. The solid blue line is the most volume that's traded in crude oil today. That's called the control point. And anything green is low value area. So I got high value red, control blue, low value green. If I look at J signal over here on the white chart, I don't have the control point. I just have the low value green, high value red. So what I do is I have 3 different types of market profile that I'm trying to find what's called stacked areas with. I'm trying to find areas where market profile overlaps market profile. I have more volume based, which are these solid red, green, and blue lines over here on this black chart. More price based, which are the dotted lines, and more developing over here on the J signal, the white chart. When these profiles overlap each other or they come within a couple ticks of each other, you have what's called confluence. What's unique about this trading system, I use market profile to conflue over top of market profile. I let it stack over top each other. So what I'd like to do is the retracement we're looking for this morning, I got a deep retracement here of 45, 44, 98, 45. The reason I'm looking at 2 times stacked area here is I got low value here on my black chart. Look at my white chart over here, low value. Low value is at 44.96, 95. So I got 44.95 right here, 44.95, and I got 44.98 here on my on my market profile chart. That means I got 2 times stacked area right here at a 62% retracement. Right there. That's going to be a hot area this morning to look for. So we'll watch that area on a retracement. Once it comes back up, we'll use market delta to pop us in, which I'll go over in a second. Now, what you want to do here, guys and gals, what you want to do on the white chart is very simple. What I like to do here is this. Okay, since we're in a downtrend, there's 2 profile levels. Here's a low value and here's a high value. This is a huge sell this morning right here. I'll show you how to do it. Once you break below low value, the market is weakened. You are not allowed to buy in this room, according to my method, below low value area. If you break low value area, the market is weakened. You look for a simple ABC or 1, 2, 3 pattern short. You break down, you retest, you look to go short. Now, once you start getting red Fibonacci dots, here's how I use my Fibonacci dots. Once I break through low value with trend is down, you're looking for the first retracement, you look for a negative market delta. All right. So if we look on negative market delta, what's happened here, it turned negative market delta right here, negative 314. Here's that retracement back up. Once it closes red, it has to close. You can open up your position on the next bar. Your catastrophic stop on gold and crude is 13 ticks because they move in $10 tick increments. So we don't risk more than $130 per one contract. But what I want you to do is drag your stop loss 2 ticks above that swing high on delta after you enter. Your average stop is going to be right around 12 ticks, sometimes 13 with slippage. So you have $120 risk on this trade that just developed in from 46.15 all the way down to 44.55. All right. So you just had a huge trade, over a $500 trade with maximum risk of $120. So you had a $500 trade with maximum risk $120. Okay. With crude oil, a negative 314, anything negative 314 is a huge market imbalance. Anything over 200 is a huge market imbalance. A sell imbalance on crude off my Renko bar. We have our own proprietary Renko bar we use. We don't use tick charts, minute charts, very lagging. We use share charts, all that lagging stuff, range bars. Forget all that stuff. Renko bars are really in tune with the market. So we have a Renko bar that goes with J signal right here. I told us to get short at negative 314, stop loss 2 ticks above the swing high. Now look how it turned negative market delta. Now if we were going to be wrong on this trade, the next market delta, if that closes blue, not blue, but green. If it closes green after you enter on a closing basis, just like the one right now is a low probability trade, you can watch it. If it closes green, you have to stop yourself out at a small stop. Take a $70 stop, $40 stop, $50 stop. Don't take the whole 13 tick stop out. So that's what we do. We're using J signal over here to find retracements, right? We're using J signal to find retracements after we break outside or inside a market profile. Now, you can't forget this, the rule of thumb in this room. You cannot buy below low value and you can't sell above high value. So I'm not allowed to sell up here. You can't short above here and you can't buy below here. You can't buy below there. Only shorts, and you can't sell above here, only buys. Don't forget that. That's going to keep you out of a lot of trouble. Finding the trend of the market is you're 50% of there just knowing the tone. That's why you ask what the tone is first. If I'm in a downtrend, I sell retracements. If I'm in an uptrend, I buy retracements. You're 50% on getting your trade right just by watching my trend filter. You're 50% already there in the trade. You're halfway there, just knowing the trend, sticking on one side of the market. Now, what we do then is we like to let it break, let it retest with trend. See, this told me the market's getting weak right here. Market's weakening up. Take the first retracement. Your first retracement is going to be the best. There's my negative market delta that cranked this thing for over a $500 trade, maximum risk $120. Now what I'll look to do is I'll look to try to get up to this 2 times stacked area on my black chart. It broke through low value area. We're smarter than the average market profile trader. We just don't buy low value area. In downtrends, we let it break, then let it retest. That's what separates us from a lot of the chaff out there that have no clue about market profile. This same setup has worked since 1985. Either we sell high value in downtrends, or we let low value area break retest within 2 ticks with negative market delta. So we're using these two charts to find support and resistance, seeing where they stack over top each other, and then we're using market delta to fire us in the trade with limited risk, and then we let the runner run. Now, after you enter the trade right here, I do have symmetry dots to help guide you out. So there's your entry right here. You're entered. Look how you can scale out. Scale half your position at the first set of symmetry, bail 75% at your second set of symmetry dots. Your third set of symmetry dots will be your overall target on this trade setup. So you're going to try to get down to 45, okay? You're going to try to make $700 on this trade. $700 on this trade by risking 120 bucks per one contract. That is how you trade the futures market. Now, if the market's flat, let's say in a flat market, what do? In a trending, it's pretty easy. I've let LVA break. I let it retest within a couple ticks of my black chart, or I let it break here on J signal, and then I get short market delta. Very simple, not hard. What do you in a flat market? If I log in and I'm flat as a pancake on my trend filter, I sell the high of HEA, buy the low in LVA, and I look for a breakout retest, which I'm going to be doing on gold. I'll go over that in a second. We're going to look for a break retest on gold here in 1 second on J signal. Okay, I'll go over that in a second. But that's what we do. The methodology, and I'll turn this off, we use my market profile. I use 3 profiles to find support and resistance. On the black chart, it's just got to come within 2 ticks of this support and resistance. On the white chart, it's got to break inside or outside of this red and green line. On all markets, you pull up any futures, this works on all futures. If I trade the QM, here's a QM. Let's say you don't want to trade, all right? I got an associate. I just went over this with on this week. Let's say you don't want to take the risk on the CL. The QM is the same way. The QM is the micro of crude oil. And you can see right here, we had a sell signal. As far as that goes, you can use a smaller time frame or a larger time frame. Here's a smaller time. I like putting the 2 sim and 3 sim next to each other. You can see I had 2 sell signals. I had one here. This conflued with the other one. They both had sell signals. Now the 2 sim, you'll get stopped out more, but it does catch more retracements. But here's your sell signals on the QM. The QM, you can take less risk. You're just going to get less profit on crude oil. But it's the same type of method. Same type of method. You're going to look for it. I like to have a QM up for confluence. So I'll have it up for confluence, and I will use a 3 sim on the QM for my market delta to pull me in. 3 sim instead of a 5 sim. So if you want to trade the QM, if I trade this, if you want to watch, get this out of your way so you can see the market delta. If you want to trade the QM, you'd use a market delta 3 sim, and there's my negative market delta right there that got you short. Right here. It's been negative all the way down. Use the same methodology though. So I can use the QM together.
You've got mail.
And they marry up really nice. That last short was confluence in the 3 sim, caught that big, huge move, negative market delta all the way down. Same thing though, you place your stop 2 ticks above the swing high. So if you want to start out the QM and not risk $10 per tick, not trade the full contract on the crude, you can trade the crude micro. But I like to use a 3 sim with my 2 favorite to marry against each other is a 3 sim with the 3 sim. If you match these up, they very, very catch big inflection points a lot. I mean, a lot. So they're very, very nice how they work together. So you can trade the QMs or you can trade the CL. If you do trade the CL, I only use the 5 sim Renko, my 5 sim Renko. And if I trade the QM, I only use my 3 sim Renko as far as a QM entry. Okay? It's not as volatile as the CL. All right? But if you do trade the QM, I would do QM with QM entry. I would not do CL with QM entry because CL can be going down and QM can falter. It's crazy how it works sometimes. So I would use QM with a QM delta. I would use CL with a CL delta. They do work out for confluence on Fibonacci dots, though. As you can tell, it nailed the last time.